Great. So welcome to today's session. This is financial management, and I hope it's going to be an interesting session. So we're going to look at the internal rate of return, IRR, internal rate of return, as another method of appraisal. Internal rate of return. Internal rate of return. This is a method of appraisal that equates NPV to zero. When the NPV is zero, we get the IRR. It displaces the NPV, right? It is a nice one. Yeah, it's a nice one. It opposes what NPV has. So you say that it is the annual rate of growth. It is the annual rate of growth that an investment is expected to generate. Is the annual rate of growth that an investment is the annual rate of growth that an investment is expected to generate. That an investment is expected to generate. Next point, it is a concept that equates NPV to zero. It is a concept that equates NPV to zero. It is a concept that equates NPV to zero. Steps in calculating IRR. Steps in calculating IRR. Step number one, determine the NPV of the project. Determine the NPV of the project. That is step number one. You determine the NPV of the project. Number two, assess the NPV in step one. Assess the NPV in step one, comma. Assess the NPV in step one, comma. If the NPV is positive, hapa nataka ushike vizuri ya. Kwanza tumetafuta NPV. Then step number two, we are assessing the NPV in step one, comma. If the NPV is positive, it means that IRR is greater than the cost of capital. It means that IRR is greater than the cost of capital. Full stop. Full stop. Then you continue and say, therefore, we increase the cost of capital. You underline that. Therefore, we increase the cost of capital. We increase the cost of capital to get a negative or zero NPV. That is the key. Therefore, we increase the cost of capital to get a negative or zero NPV. Full stop. Next statement. Still under that. Okay, maybe before you go to the next, you can say that we use the trial and error method. So when we are coming up with now increasing the cost of capital, we use the trial and error method. We use the trial and error method. We use the trial and error method. Next statement, still under that. If the NPV in step 1 is negative, if the NPV in step 1 is negative, what does that mean? What does that mean? What does that mean? Somebody who is following these can tell us. If the NPV in step 1 is negative, in a translate nini, it means that the IRR is less than cost of capital. Good. The IRR is less than cost of capital. Therefore, what will happen to our cost of capital now? The other one we increased, this one. Therefore, we recalculate the NPV by reducing the cost of capital. We recalculate the NPV, nataka ushike hapo vizuri, by reducing the cost of capital, thank you, to get, what are we expected to get here? Tunataka tupate nini? A positive NPV or zero? A positive NPV. Very good. Hapo sawa. Hapo sawa. Hapo sawa. The whole statement. We are saying that if the NPV in step 1 is negative, it means that the IRR is greater than, is less than the cost of capital. Is less than the cost of capital. Therefore, what we do, we recalculate the NPV by reducing the cost of capital. By reducing the cost of capital, targeting a positive NPV or zero. Targeting a positive NPV or zero. Targeting a positive NPV or zero. Then the last one, step 3, interpret the variables to get IRR. You interpret the variable to get IRR. IRR is gotten by LR plus NPV over LR divided by NPV of LR minus NPV of HR. All of that multiplied by HR minus LR. Very important. Where LR represent lower rate, HR represent higher rate. So ukishashika hiyo sawa. Lower rate, higher rate. Lower rate, higher rate. Good. I'd like us to look at a question from May 2021. Illustration. May 2021. May 2021. Question number 1, boy. May 2021. Question number 1, boy. Somebody to just share that with us. I want to share with us that question. Somebody to share with us that question in the group. May 2021. Question number 1, boy. So we look at that question. Point 3, we have said that you interpret the variables. You interpret the variables to get IRR. You interpret the variables to get IRR. You interpret the variables to get IRR. Great, I hope kila mtu wako pale. May 2021. May 2021. We are looking at question number 1B. So I'm going to read this question. Number 1, boy. Number 1, boy. So have you been told? Been told that I hope you're there. I hope you're there. Tuko pale, confirm. Kama umefika pale. Okay, good. Sawa. So, the question wants us to use the IRR to solve. So we are told that Nyakati Limited intends to invest in a 4-year mini project whose initial outlay is 32 million. The project is expected to generate the following cash flow at the end of each year. So you have the cash flow 12, 15, 9, and 6, and the cost of capital is 12%. Ignore taxation. Required. Advise the management on whether to undertake the project using the internal rate of return method. Okay. To advise this management hapa. And Mwalimu Songa Thando. Kuna mtu anataka kuchukua ili anataka kupiga picha pale. Okay. So we want to advise the management. So the first step is to determine the NPV. So let's move with it very fast. Determine the NPV. Solution. Determine the NPV. Determine the NPV, the net present value. So we have 4 years here. Year 1, 2, 3, 4. And we have the cash flow here. Shillings can be shilling in 1,000, yes. Shillings are in 1,000 like that. Then we can have our this. What is our cost of capital? 12%, right? So this one I can have 12, 15, 9, 6. 12, 15, 9, 6. 12, 15, 9, 6. 12, 15, 9, 6. Great. Okay, let's get the PV. remember these are a non-uniform cash flow. They are not uniform, right? They are irregular cash flow. Therefore, we discount using PV. This is how we the time value of money concept. Don't forget. Don't forget. So give me the discounting factor here. Of course, in here 0 point. 0 point. Haya, fatia kwanza 89.29. Ya pili. Tusonge. This is 79.72. Ya tatu 79.72 sawa. Ya nne, ya tatu na nne 71.18. And the last one 63.55. We are done. Then we get the discounted cash flow hapa. Just take the cash flow times the PV. Ya kwanza step ya kwanza. You can eliminate hizo kama kuna decimal point eliminate 10,715. Haya, let's use the whole number. Ya pili and remember speed tulisema ni key, that one guide our mind very well, to guide our mind. 15 times that na 11,958. Tuko kwa ya tatu 6406 sawa. Ya nne 3813. Let's see who will be the first one to give us the total hapo. Total present value will be the first one to give us that's the key. Speed tulisema kwamba hii mwezi speed ndio tunataka tu 32,892. 32,892. Hey, that speed is amazing. Brilliant. Great. So if this is the total present value, we can get the NPV, net present value. It's given by 32,892 minus initial outlay of 32,000. What is our net present value? 892. Now, Machapa step 1, and we have gotten our NPV is a positive NPV. Now, what is the next thing? What is the next step to take? You get a positive NPV. We said something in our explanation. We say that now we need to change our cost of capital. Are we changing it going upward or downward? We increase the cost of capital. Exactly. We increase the cost of capital. If you compute in the first juncture, you compute and get the positive, you increase the cost of capital. Kama tungepata negative hapo, tungefanya nini cost of capital? Chini. Jua tu hivyo. So in our case here, we want to get an either negative or zero NPV. Hiyo ndio IRR inatuambia. If you want to utilize this formula, now you need to get a negative or a zero NPV in order to continue. Now, which rate should we use that will give us automatically either zero or a negative NPV? Haya, hapa ndio sasa shida inakujaga. Unakuta mtu anatumia 1 hour akishinda akijaribu. Anaweka 13% inakata. Anaweka 14% inakata. Anaweka 15 inakata. Yaani mtu anashinda tu hapo na unaona max zenye ziko hapa bwana. Hizi ni max zinataka ufikirie haraka. Increase cost of capital. Yes, we are increasing. I can see Miriam is telling us that if we are to increase, then we double that. Yeah. I would advise all of us, if you get a positive NPV, now you want to increase the cost of capital, double it so that you don't start struggling. It is attested that once you double, it will automatically give you either zero or a negative NPV. So let's double that. So as for me, I will not repeat the whole of this. I will just eliminate all this. like that, and then I double my 12 to be 24. 24. So for you, you have to have another one. So give me this. We have now increased our cost of capital. Our target is to get either negative or 0. 80, 65. Ya pili, tusonge tumalize. It's a matter of kuweka kwa kaki. 6504. Haya, tusonge. Annette ameamuka kabisa. 5245. I hope you are able to see. Annette ameamuka kabisa. And then the last one, 4230. 4230. Haya, let's go. 12 times this, like that. Aha. Ya kwanza, 9678. Ya pili. Haya, speed inakataa. Kwani mnaweka speed governor? 97 58. Is it 58? 56. Unaweka speed governor 756. Hiyo ingine ya tatu, that one 4221. Tumalizie 4221. 4721. 4721. Alafu 38. Why am I interchanging? 2538. 2538. Tuongeze hiyo, will be the first one to give us the total present value. Present value, wacha tuone, will be the first one kuchapa hiyo. Hiyo speed ni muhimu 26,693. 26,693. Great. Now we get the NPV using the higher rate. Itakuwa 26,693 minus 32,000. Remember we eliminated 30. Tunapata ngapi? What will be the NPV in that? Yes, remember I'm looking for a 0 or a negative. It's a negative, 5308. Victor, negative. I have achieved what I wanted. I wanted to either get the higher rate should give me either a negative NPV ama 0. One sum niko sawa. 07 or 08? 0708 people to confirm. I want two more. 07 there. 07. Good. Now class, we can use our formula to get our IRR. Formula ndio hii hapa. IRR is equal to then. Hata mnaweza nipea tu figure niweke. What is our lower rate? Ndio hii, lower rate. Ni ngapi? Lower rate. Tulitumia gani? Whatever that examiner has given you, ndio. Ilikuwa 12, Si ni lower rate, the cost of capital ndio hiyo. Plus NPV of lower rate tulipata ngapi? Hii ni kitu sasa rahisi sana. NPV of lower rate ilikuwa ngapi? 892, si ndio? 892. Divide by NPV of lower rate minus NPV of higher, which is 5307. At the end of the day, hiyo itakuwa plus. Higher rate ni ngapi? 24 minus lower rate of 12. Is it now not possible for you to solve that? And remember to utilize the board mass. Please solve this. Just solve. Hapa minus give us positive. So I expect my denominator hapa ya kwa kubwa, sababu utaziongeza zote mbili. Minus positive. We use 12 ama 12. Let's use whichever that you use. Hata ukitumia 0 point, at the end of the day, tunajua tunataka percentage. At the end of the day, chenye tutapata ni percentage. Tutai-convert tu baadaye. Haina shida. Bora ni kujua. Chenye tutapata at the end of the day, percentage. Internal rate of return. It's a rate. So chapa hiyo tuone tutapata ngapi. Hiyo tuone tutachapa ngapi. Tutapata ngapi? IRR. We're getting that. 12.73. Haya. Haya, mwalimu, let me take screenshot. Lilian leo ni wa screenshot. Lilian, what's happening? Are you traveling? Are you traveling, Lilian? Lilian leo ameamua ni ka screenshot kadogo kadogo. Haya, no worries. No worries, just take a screenshot. 13.73, okay. Uh-huh. Mm-hmm. Mm-hmm. Now we have that. People are getting 13.73. I hope kila mtu ameweza kupata hiyo. 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 Niko na swali. Second bracket we multiply ama add. Second bracket. Hapa unaongeza, hapa una multiply. Hapo ni iko tu multiplication. You multiply. You multiply. It is a percentage. Yes, it's a percentage. Huku tuna percentage huku. Hizi marate zetu ni ma percentage. So it's a percentage. So just multiply you put it as a percentage. Okay. So ni hiyo. I hope utapata kitu kama 0.1373, si ndio? You express it as a percentage. And you'll be done. Be done. Class, are we together? Kwa pamoja? Kwa pamoja. Kindly, sir, are getting a correct answer. But my worry is, how did we recalculate the NPV to negative? We recalculated, Maxwell, we recalculated the NPV by following the instruction that we wrote. You see, in the first case, we got a positive NPV, right? That positive NPV tells us that the IRR is greater than the cost of capital. And since we don't want that, it will not give us the best result. We recalculate or we increase the NPV in order to get a negative NPV or zero. And that's where we say that we use the trial and error method. And for us, we have just come up with a way where we shall not be start testing 13%, start testing 14%. That one will be wasting our time. We have said that we shall be picking what we have. We had 12% in the question. That was the cost of capital. You double it. Once you double, automatically it is tested. It will give you a negative NPV, ama zero. You got that, Maxwell? You got that? All right, great. Now I want us to move to the next thing. So I give you assignment. Please go and attempt November 2015, question number 3. You see an IRR question. November 2015, question number 3. Utaona tu swali hapo. Kama ni 3 si chapa hiyo. November 2015, question number 3. So that is an assignment. Just go and attempt that. Go and attempt that. And then share your work. Then we go to the next part, which is PI, the profitability index. Profitability index. Profitability index. Profitability index. Profitability index, you say that it is the measure of a project or investment attractiveness. It is the measure of a project. It is the measure. It is the measure of a project or investment attractiveness. It is the measure of a project. It is the measure of a project. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the measure of a project or investment attractiveness. It is the of a project is the measure of a project or investment attractiveness. The measure of a project or investment attractiveness. It is given by the formula. It is calculated as follows. Is calculated as follows. Is calculated as follows. So to get the PI, we need to first of all get the present value of cash inflow divide by what? The initial what? Initial outlay. Because sasa it's an index. You're not multiplying by 100, not as a percent. It is an index. By the way, hapa, how do you interpret? How do you interpret hapa? If the IRR is greater than the cost of capital, accept the project. For IRR, unaweza kaandika mahali, interpretation is that if the IRR is greater than the cost of capital, accept the project. If the IRR is greater than the cost of capital, accept the project. Next one. Who's the decision rule? Ndio hiyo sasa tunapatiana. Ndio hiyo tunapatiana. Okay. If the IRR is greater than the cost of capital, accept the project. Number 2, or next point, under this, under IRR. If the IRR is less than the cost of capital, you reject the project. You reject the project. And the other one, the last one, if the IRR is equal to the cost of capital, if the IRR is equal to the cost of capital, you may accept the project. Now, in our case, do we accept, reject, or we may accept? In our case, in our question there, should we accept? Yes, we accept because the IRR is greater than the 12, the cost of capital, which was 12. So this is how we get the PI, the profitability depth. Fortunately is that we are going to use the same question. The same question in November 2015. Question number 3, November 2015. Somebody to share illustration. That question wanted us to use IRR and PI illustration. November 2015, question number 3 ngapi? Angalia hapo. November 2015, question number 3 ngapi? Hiyo ndio swali nataka tuchape. Somebody to just either take a screenshot kadogo tu and then share. November 2015 question. Somebody to share with the group. Dribble, yes, it is dribble, yes. So just share wenye hawana wapate, najua kuna wenye hawana, though we say that you should get all those past paper. You have a folder for all those past paper. Some people even go ahead and sacrifice and print all of them. So they have a hard copy. So there we are. Hakuna mtu anatumia watu. Okay, we proceed. Proceed. I hope kila mtu ako nayo swali. So, in that question, if you look at that question very well, what is our cash flow? What is our cash flow? The cash flow is 65 million, right? 65 million. No. That is the initial outlay. Initial outlay is 65 million. Annual cash flow after tax is 21 million. And then we have a project economic life is 5 years, and the required rate of return is 12. You're required to assess the suitability of the capital project using the following method. Method 1, you are to use the IRR. Hiyo ndio nimewapatia hapa. Sawa? Method 1. Method 2, use the profitability index. And you can see the number of bots sio kidogo. So let's use the PI to solve that. So PI is equal to present value of our cash inflow. Now, I want somebody to tell me, which type of cash flow do we have? The 21 million here. Is it a regular or irregular cash flow? Regular or irregular? Is it similar or non-similar? Uniform or non-uniform? They are regular cash flow, therefore we discount using what? We discount using PVFA. PVFA, 5 years, 12%. Divide by what? Divide by the initial out. So if you wish, you can maybe start by getting PVFA. PVFA 5 years, 12%. So just tell me what to write. 1 minus 1.12. Kuna mtu atajua nimetoa wapi 1.12 leads to -5 divided by 0.12. Are we together as far as this is concerned? Are we together as far as my PVFA is concerned? PVFA 5 years, 12%. Are we together? Ndio mtu ameshika, nimepata aje hiyo. Tulisema time value of money concept ni backbone ya finance, right? Hata MBAs, watu wenye wanafanya masters, hizi vitu muhimu sana, relevant to them. Wanaulizwa hata hizi IRR, wanaulizwa masters. If you're doing master, you know. Najua hata kuna wenye wanakuja na maswali za masters. Zinakaa hivi. So, is that correct? Is this correct? To get my PVFA? Is it correct? You just type Y for yes, if it's correct. If not correct, let's correct it. It's correct. Kennedy, Miriam, confirming it's correct. Great. Now, can you give me this? What is my PVFA? Patie my PVFA hapo. How much is it? To 4 decimal places, 3.6048. 3.6048. Therefore, to get my PI, it's simple now. PI will be given by 21 times 3.6048 divided by 65. Si unipatie tu PI na nimemalizana na hiyo. 3.04. Frida hiyo yako ni gani? Umechapa hii vizuri. At least -5 yako vizuri. Just check or use the table. So give me the IRR and then we look at the decision rule. Hiyo na confirm. So nipatie hiyo. So that we give the decision rule. Hiyo haina maneno mingi by the way. Kitu muhimu ni kujua tu formula. Kujua vizuri mambo yako inakuwa shwari kabisa. $1.16. And we are done. Decision rule. Cash flow. Does it mean the cash flow for each year is 21? Thank you for asking, Monica. How have you decided it's a regular cash flow? Does it mean the cash flow for each year? Yeah, you say. Naona vile ametupatia hapa. Unaona vile examiner ametupatia hapa hii cash flow yetu it is always good to note cash flow yenye tumepewa Tumeambiwa annual. Hiyo jina, be looking at that annual cash flow annuity. Annual annuity. Hiyo hata usifikirie mara mbili. Annual annuity. Yes. Now interpretation or the decision rule for this, if the PI, just right, one decision rule or interpretation of this, if the PI, no, usilete mambo na sharing index. Hii ni index. Sawa piece, index. We're dealing with the index hapa. And that's why tuki-interpret tutasema, if the PI is greater than 1, accept the project. Kama PI ni greater than 1. So hapa tuna deny index. If the PI is greater than 1, accept. If it is less than 1, reject. If it is equal to 1, may accept. Hivyo tu, and we're done. Hope you understand. And then, please, I would like you to tell me, what should we do to this project? Should we accept? Yes, because the TI is greater than 1. Let's go to the next one, which is discounted payback period. Hope that you remember the definition of the payback period. Counted payback period. Hope you remember the definition. We say that it is the period taken by a project to recoup or to recover the initial outlay. Tunachukua miaka ngapi kupata what we invested at the start? How many years do we take to recover what we invested at the start? Right? That is what we mean by the payback period. So in this case, we just followed the formula that we had. The only thing is that we shall now discount the cash flow, making it at least acceptable, right? At least acceptable. Removing it from being traditional to bringing it to modern. Now, we can say something regarding it. You say that a discounted payback period gives the number of years it takes. A discounted payback period gives the number of years it takes to recover the initial investment, by discounting future cash flow, by discounting future cash flow, and recognizing the time value of money. By discounting future cash flow, and recognizing the time value of money. So the moment an appraisal technique has bring in the fact that they can consider the time value of money, and they can have that aspect of discounting to become a modern technique. So we have removed, at this point, we can have our discounted, our payback period to the modern side. Now, to the traditional tumebakisha gani? Ni gani imebaki kwa traditional kule? Is not translated huku kwa modern. Somebody, acha nione wenye wanashikanisha hizi vitu. Kwa traditional tumebakisha gani? It has not been discounted so far. Maybe in future you can come up with a way we can discount it. And we had two in the traditional, sindio? Accounting rate of return and the payback period, sindio? So payback period already zimekuja huku. ARR, accounting rate of return, ndio haijakuja on this side of discounting. Now we repeat, a discounted payback period gives the number of years it takes to recover number of years it takes to recover the initial investment by discounting the future cash flow, and recognizing the time value of money, So how many years does it take for us to recover or to recoup the amount of money that we invested at start in that project? And we say that the shorter the period, the better the project. The shorter the period we take to recoup or recover what we invested, the better the project. So you can look at a November 2018, question 2 boy illustration. November 2018, question number 2 boy. So we look at that question together. November 2018, question number 2 boy. Tuiangalie pamoja. Ruth, tunarudia wapi? The period that it takes. Hiyo ni kama tu ile tu. Unaona kama ile. The only thing here is that now we are discounting. We are acknowledging the discounting, or we are recognizing what? The time value of money. Ruth, Nasema, discounted payback period. Give the number of years it takes to recover the initial investment, by discounting the future cash flow, and recognizing the time value of what? Time value of money. I hope you are done. Hope you're done. Let's look at November 2018, question number, is it 2B or 3B? 2B. Good. 2 boy. November 2018, question number 2 boy. Are we there? And I want somebody by the name Alan. Alan, are you in a position to read for us? Alan. Are you in a position to read, to take us through that question? Or who is ready? Not Miriam. Miriam led last time. Who is in a position to take us through that? Already Florence and Michelle. Who is ready to read for us the question? Who is ready? I can read. Okay. Mary-Ann Kiari anataka asome. Acha tu unmute Mary-Ann hapa. Mary-Ann M. That is when we have M. Okay, I unmute. Ask to unmute. So you can just take us through. Just read for us.
Okay. The management of Bundacho Limited is in the process of evaluating 2 projects, namely Alpha and Beta. The estimated pre-tax cash flows of each of the projects are as follows. We have Project Alpha, Project Beta there, and we have their cash flows there. Then we have additional information. Number 1, we have Project Alpha costs 3.8 million and has an estimated lifespan of 4 years. And number 2, Project Beta costs 8 million with an estimated lifespan of 6 years. Number 3, both projects have a 0 salvage value. Number 4, an investment in working capital of 825,000 shillings will be required irrespective of the project to be undertaken. Number 5, the cost of capital for the company is 12%. Number 6, the corporate tax rate is 30% required using the discounted payback payback period method recommend the management of Bundacho Limited on which project to undertake?
Right, thank you so much, Marianne, for that. That's a nice question. Nice question here. So we need to use the discounted payback period to solve this. So we can start with the first project, which is project Alpha. Project Alpha here. Project Alpha. Project Alpha. And I can see we have 4 years. This project has 4 years. So the first thing, we just identify our years here. Year 1, 2, 3, and 4. Then the cash flow here, shillings can be 1,000. And we have 29. No. Let's use the other way. If we use this way, I have said yes. Let's use horizontal. Let's just use horizontal. Here, 1, 2, 3, 4. I think horizontal will help me to solve it correctly. Yeah. So the good thing with the FM is that you can use method yenye bora ipatie wao accountant with a nice voice. Wewe Maxwell. So we have these are our after tax cash flow. After tax cash flow, right? After tax cash flow. What comes to your mind when examiner tells you that these are after tax cash flow? After tax. Oh, pre-tax, not after tax. Pre-tax. Pre-tax cash flow. What comes to your mind? These are the earnings which we have not deducted the tax, which we have not deducted the depreciation. But in this case, I can see that we can get our, yes, EBDT, earning before depreciation and tax. Earning before depreciation and tax. And I can see examiner has given us even the cost and the lifespan. So we can go ahead and get our DTS. We can go ahead and get tax. We eliminate all those items. Those are non-cash items, and we will be able to do what? We'll be able to get our cash flow to discount. So our earning before depreciation and tax for year 1 here given, the given ingapi? Year 1, 2590. Year 2, can just give me those. Year 2 tuko na ngapi? 2880. Year 3, 3050. And year 4? Year 4, 2950. So having that, we can, if I want to use my DTS method, what should I do next? Unajua, it determines, that matters a lot. If I want to use DTS, nitafanya nini next? I less tax. Exactly. If you want to use the DTS method, na less tax hapa haraka. So tax, unipatie 30% of each. 30% of each, 777. 777. Hiyo ingine. Songe. 777. 864. Hiyo ingine ngapi? 915. Next one. 885. Good. Then we add DTS. So DTS, I know it's tax times depreciation. So I have first of all to identify the depreciation. Kwanza, we do a depreciation in ngapi. Depreciation for project Alpha. What is the cost? I know they told us to use straight line. So depreciation will be given by cost minus salvage divided by useful life. Useful life. Waliniambia salvage ni 0. Hapa niko na 3800 minus 0 divided by 4. What will be that? Yes, it is 3800. So can you give me that? Give me that. It's 950. So I'm going just to get my DTS by taking 950 times 0.3. What ngapi? 950 times 0.3. Here 285. Thank you. 285. And that is my DTS throughout. 285. So itufanye pamoja, hiyo ingine niwapatie mfanye haraka haraka. Then we move to the next part. 285. We are not resting. Wait. You can see the brander one can do, eh? Yeah. You add. Hey. You know, this bracket is contagious. Once you head it here, down here it can be contagious. You can transfer 285. 285. It's contagious. It is like smile, eh? Smiles are contagious. Okay. Money I may agree. That's true. Yes, that's true. So the first one, let's get our after-tax cash flow. After-tax cash flow. Sasa tupate zetu 2098. 2098 tusonge. 2098. Ya pili, ya tatu, ya nne, like that. 2301. Ya tatu, ya nne. Ya tatu, ya nne. Ya tatu ngapi? 2420. And the last one? The last one ya mwisho sasa 2350. Sasa nataka we discount. What is the discount rate? We discount. Tulipewa ngapi? Sasa inanipatia 12% cost of capital, right? 12%. So we discount. These are irregular cash flow. These cash flow are irregular. Therefore itakuwa 0.0. Na sasa hii 12 tumetumia mara mingi. Ya kwanza inakuwa 8929. Ya pili inakuwa sasa tumeitumia sana. 8929. Ya pili inakuwa 79. 7972. Hiyo ingine ni 7118. 7118. Na mwisho 60. 63. Ukishazi master hivyo inakuwa mambo mzuri. So why can't we get the discounted cash flow? Na hiyo ndio tunataka. Discounted cash flow mwaka wa kwanza, just multiply like that. Right. 10 to 1 decimal place, 1873.3. Haya, 1 decimal point sawa. Hiyo ingine. Hiyo ingine 1834.4. Number 3. Yeah, 3. And remember speed, what you do under that chat box means a lot, Means a lot. Haya, tia ya tatu. Utilize your chat box vizuri. Okay, to 1722.6. 1722.6. Hiyo ingine ya mwisho 1493.4. Sasa darasa. Sasa. This is what we wanted. It is discounted payback period? Yes, we have discounted our cash flow. Now we just revert to the method here, kupata the payback period, whereby I'll just now come and check. Yes, what do I have here? I have here 1 to 4. I have here 1, here 1, 2, 3, and 4. Then I have discounted cash flow like that, and my sharing card be 1000. I have 1873.3, 1834, 1922.6, 1493.4, like that. And then there's something that I need to know. Yes, I have now my discounted cash flow, lakini I need to know what is my total initial outlay for this project. Ili nijue what was the initial investment that I want to recover from this. Sawa. So do we have information that can guide us to get that? Initial outlay. Sasa initial outlay hakuna mtu akona shida ya kupata. Hiyo tutazika accumulate. Now tuko na hiyo 3.8 the cost, and then usisahau kwa initial outlay vitu zenye zinakuaga pale incidental, kwa replacement kuna kutoa hiyo the disposal value. Usisahau hizo vitu, ni muhimu usisahau. Sasa hapa tuko na working capital. So it's part of what? Hiyo ilikuwa secret kubwa sana kwa hii swali. Working capital, it should be added to that. That is ili tupate our total initial investment. So our total initial investment ngapi? Total initial yenye tunataka kupata investment itakuwa 3800 plus 825. Unapata ngapi? Nipatie hiyo total hapo. Mimi nishatoa maziro tatu. I'm dealing with so we want to get 4625. Alafu sasa you follow the route. You do what our friend is telling us. We get the cumulative cash flow. So ya kwanza naleta 1873.3. Ya pili kwa ngapi? Tata. Ongeza kwa ngapi? Takuwa ngapi? Ongeza hizo mbili tu. Nataka kufika kule. 3707.7. Nikiongeza hii hapa itakuwa more than 4625 hapo kwa investment. Tunasema kwamba the initial outlay, it has several components. Ngoja kidogo, wait a minute. Nasema initial outlay has several components. One of the components is the cost of that item, right? Other components are incidental costs, the cost attached to that item before it is put into use. We also have the investment in working capital, which we call the WC, right? It's also part of initial outlay. Even overhaul cost. Hiyo iko number 4, hiyo iko hapo, investment in work iko number 4, additional information number 4. So hiyo ndio ilikuwa catch. Ukisahau hiyo utumie 3800. Yes, sasa ungepata nini yako hapa, ingekuwa point something, ingekuwa kidogo because ingekuja tu around hapa. But 0.7 ingekulenga kabisa hapo, point something. So people are telling me that this will exceed. So what I do, I bring my 4625, and immediately what should I do? Once I bring my initial outlay hapa, what should I do? I put a curly bracket, direct like that, and then I put A. That helped me to remember that the remaining amount is one that I leave here. So I take this minus this. Nione inabaki ngapi? Yenye tunaomba hapa. Inabaki ngapi? Somebody give me, is it 917.5? 917.5? Right? I hope that is 0.3. 917.3. Good. That is the case then. I come and now use my formula to getting the discounted payback period, which is the full year, hope you remember, plus the remaining amount over the cash flow. And this cash flow is the cash flow for the year that has assisted me to get hii. Naona hii 917 tumeomba hapa ili tuweze kujazilia hapa. This plus hii, unaona hii 3707.7 ukiongeza hii itapatia hii. That's the thing. Sawa. So isikupatiage stress at any given point. Content should not be stressed. You deal with the numbers. So this is a full 2 years. 2 years full. We utilize the cash flow hapa yote. Hapa tukatumia pia yote. Full year. Hiyo ndio tunamaanisha. plus 917.3 over this cash flow. 1722. It's a portion of that. And people are giving us 2.5. Yes. Okay. Class, are we together? Kwa pamoja? Kit, are we together? Are we together? Good. Can we learn with the other project? Let's run with the other project. Ni project inajita hii ilikuwa alpha, ingine ilikuwa namna gani? Beta. Let's learn with the beta very fast. Tumalize beta and then we move to the next thing, which is the modified internal rate of return. Our last appraisal technique. Modified internal rate of return. So kila mtu anafanya beta. After payback period ya beta, then we advise which is the best between beta and the other one. So kila mtu anafanya beta. That. Great. This is good. That's good. And I can see the time you guys have taken. It's almost the same, eh? Hiyo nyote isipokuwa Victor mwenye alikuwa a bit fast. 3.9. Good. At least you have taken your time. You have taken your time to great. That's very good. That's very good. So should we now go to the next appraisal technique? Should we go to the next appraisal technique, which is modified internal rate of return? Should we go to that? And then for that question, somebody will take a picture and share in the group so that for the person who have not understood how we've gotten to 3.9, you will be able to see which project is the best. Which project do you advise these managements? Which project do you advise? You are told to advise which project to undertake. You advise this Budacho. Even Kit got that. Right. So the project with the less years, you're getting 3.5. You're getting 3.5. Grace, I know maybe what you've not done. Is looking at your initial. Hapa, hii remaining amount, you are not putting hii imepatia. You're not using that. Just tick. Yeah. Finally, nilikuwa nashangaa mmoja na Linet hapo wapi? Linet nimeona yake kweli. Finally 3.9, eh? Yeah, you struggle until unakazana nayo. Hata kwa mtihani we kazana. Until the end. Great. Yes, we choose project alpha since it has okay, so quick recovery to have. It has a shorter period to recover what? It will take us just 2.5 years to recover the initial outlay. And the other project, it will take us 3.9 years, almost 4 years to recover that. So that is it. Let's go to the final appraisal technique. The final appraisal technique, which is the modified internal rate of return. The final, which is a modified internal rate of return. 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 You say that it is a method of calculating the return on investment. It is a method return on an investment with multiple irregular cash flow. 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 Multiple irregular cash flow. It is the only method that uses compounding technique. It is the only method. It is the only method that uses compounding technique. It is calculated as follows, or computed, or determined. It is determined as follows. So how do we get MIRR? It's given by nth root of nikuwe na space kidogo hapa, the cumulative compounded cash flow, cumulative compounded cash flow divided by initial outlay minus 1. The whole of that minus 1, so that you get there minus 1, where n is the number of years. Number of years. N is the number of years. N is the number of years. N is the number of years. Illustration, May 2019, question number 5D. Illustration, May 2019, question number 5D. May 2019, question number 5D for dog. May 2019, question number 5D for dog. Great. Let's look at that. That will be the final thing we are doing. Final thing we are doing today, May 2019, question number 5B. Are we there? Are we there? Yeah, we are having some cash flow here. Having some cash flows. May 2019, 5B. Yeah, here we are. Here we are. Here we are. So the question is, BD Enterprises is a small medium enterprise in floriculture industry. The company intends to invest 300,000 in a project that has a useful economic life of 4 days. The following are the expected cash flows. Year 1 to 4, the cash flow 140, 120, 80, and 60. The company's required rate of return is 14%. You're required to come up with a modified internal rate of return. Modified internal rate of return. So to solve this class, we compound the cash flow. Compounding. Who can remind us the compounding formula for irregular cash flow? For cash flow hapa. Irregular cash flow tulikuwa tuna compound aje? Tuko na 140, 120, 80. 140, 120, 80, and 60. Well, how are we compounding? Compounding is just simple. We getting the future value. We're trying to get the future value. So we compound by 1 plus R, the irregular cash flow raised to N. N does not have a, we're getting future value. Future value. So 1 plus N, 1 plus R raised to N. N does not have what? N does not have a negative. So we do that. Now we are looking at future value, FVIF. FVIF 14%. So it will be 1.14. All the rate is that, rate 2. By the way, my 140 itakuwa compounded miaka ngapi before we get to the future? 140 itakuwa compounded miaka ngapi? Compounding, hata tuna compound tena. Miaka ngapi? Before we get to the 4th year. 3. Hiyo ndio kitu muhimu sana kujua hapa. Ukishajua hivyo uko sawa. 3. Compound. Before we get to the future, which is the 4th year, this 140 will be compounded mara moja, mara mbili, mara tatu. What about my 120? Mara moja, mara mbili. So that by the time nafika future hapa, my 60 will be the same. Sini already niko hiyo future, the 4th year. This 60 will not change. So always make sure that year mwisho ina remain the same. So that will guide you. So I will raise my FVIF with 0 here to make sure that it will remain the same. So for the second one, this one raised to 3, raised to 2, raised to 1, and this one is 1.14 raised to 0. So hapa to get the future value hapa, or the compounded takuwa total ya hizi. Of course this is 60,000, will not change. Haya, nipatia kwanza sasa. How much shall we get? These, by the way, these raised to 3. Napata ngapi? 1.14 raised to 3. Bila negative. We are compounding. Bila negative. Unapata ngapi? 1.48. Ya pili? Raised to 2. Raised to 2. 1.14 raised to 2. 1.3. Hiyo ingine ni the same, 1.14. Sindio? Hiyo ina remain the same. Ni ukweli. Hala? Hii itakuwa ngapi? Hii 1.14 raised to 1. Si ni the same? Ama ina change? Na mbona inakuwa kidogo mingi kuliko hiyo ya kwanza? Oh, hapana, 1.4 ni kidogo. Okay, good. And then this one is 1. Haya, sawa, multiply now. This times this. 140 times 1.48 tunapata ngapi? Tunapata ngapi? 140 times 1.48. Wacha tukue tu na whole number. Let's deal with the whole number. Ama okay, hata kama kuna point later. Later hata point 207. 200. Hiyo ingine ya pili, the second one. Watu wachangamke, tunamalizia ya pili. At least. Haya, ngoja kidogo. Umeona something. Aya. Kuna mtu Maxwell, you are working on it. Aya. Martin, I hope, not Martin, but Maxwell. I hope hujaachwa nyuma. The better part is that we have written everything there. So 156,000. That's good. If you got it, that is very good. That is resilience and being intentional. We are intentional in passing this paper. We are intentional in passing the paper. So hiyo ingine itakuwa ngapi? 91,200. 91,200. Now we want to get our cumulative compounded cash flow. Si unaongeza hizi zote. Ongeza hizi zote. Cumulative compounded cash flow ni ngapi? Ongeza hizo zote. Cumulative compounded cash flow. Total. Hizo zote. Sasa tunakuja kucheza na our roots. 514,400. 514,400. Then I can get my MIRR. MIRR is equal to 4th root of 514,400 divided by, what is our initial outlay? 300,000. 300,000. Then whatever that I get there minus 1. So hapo watu wakumbuke ile fourth root. Is it 374 kweli? 1000. Just add vizuri. Hii ni 207. Hiyo already 156,000. Hii ni 91. Ongeza tu vizuri hapo. Grace. Haya, tuko hapa sasa. How much are we getting hapo ndani? Hapa ndani kwanza. So that tukue na 4 root of something small hapa ndani. Hapo ndani. It's 514. Yeah, 514,400. So hapa, this divide by this itakuwa ngapi? Tupate hapo vizuri. Tupate hapo vizuri. Tupatia 17.15. 4 decimal places ni sawa. This divide by this, somebody. Hapo ndani kwanza. 1.7146. 1.7146. Haya, utafute fourth root ya hiyo alafu utoe 1. What is fourth root of this? Naanza na chenye iko kwa bracket. Body mass. Body mass muhimu. Fourth root ya hiyo ni ngapi? Fourth root ya hiyo ni ngapi? Fourth root ya hiyo ni ngapi? 4 decimal places. 1.1443. 1.14, hiyo ndio fourth root. 43 minus 1 itakuwa na 14.43%. My MIRR is that. So can you make sure that you are getting that? 7147, Grace anapata 7147, sawa, ni sawa tu. Now get the fourth root of that. 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 Haya. Is there anybody who is not able to get the fourth root? You type 4, then shift, unakaa hivi, hapo, alafu unafinya hapo, so 4, shift, unafinya haka, alafu unaweka ile. Weka hiyo ndani. Naweka hiyo ndani. 1 point. So, I hope everybody is able to get 14.47. 14.47. Please confirm that you're able to get that. Please confirm that you're able to get that. Confirm. 14.43, Frida confirming, great, that's good. Anybody else who wish to confirm what they are getting? Yes, that is confirmed, great. Once you know how to get the root, mambo inakuwa rahisi sana. So our MIRR is 14.43, and in that case interpretation is that when the MIRR is greater than the cost of capital, you accept the project. If MIRR, to decision rule, if MIRR is greater than the cost of capital, accept. If MIRR is less than the cost of capital, reject. Alafu hiyo ingine MIRR equal to cost of capital, you may accept. You may accept. Great. So that is the decision rule. So class, that is it. Next time we meet, we shall be looking at capital rationing. When we meet next, we shall be looking at capital rationing. But we have some assignment for you. There we have. So this is a capital rationing. Shall be able to look at the types of capital rationing. We'll be looking at the causes of the capital rationing, or those types, and That would be it. So let's have several assignment hapa. Several assignment hapa. Did I give you assignment on August 2024, question number 1, boy? August 2024, question number 1, boy. In fact, I need to give you the whole of that question 1. No, just do. August 2024, do question number 1 and 2. Yeah, hiyo itakuwa sawa. 1 and 2. Remind yourself even the evaluation. August 2024. August 2024, question 1 and 2. Question 1 and 2, hiyo itakuwa sawa. It will help you to review very many things. You gave that last time. So have you done? Have you done? Have you done? The swali is, have you done? Umefanya? Just confirm kama umefanya. Just looking at another one. So hizi vitu kumbe tumemaliza bwana. Umefanya? Mbona hapo sasa, mbona hapo watu wananyamaza? Hiyo chai ni moto. Chai ni moto. Chai ni moto. Kuna watu not yet, So can you pick it and remember we have a very long weekend, I'm on my way hoping to get 14. Yeah, get it. Oh, you're on my way. Wacha tufanye sasa. Not finished yet. Yeah, watu wamalize. Bado nazikumbuka hizo. So make sure that umemaliza. Then as a group, make sure that you have at least a working group. Look at April 2024. April 2024. Wenda ngangana na question number 3. Question number 3. Yeah. Question number 3 na question number, fanya 2, 3. 3 iko sawa. 3 iko sawa. Then tumesema ngapi? But number 1C is a challenge to me, okay? Nobody tutazifanya. 1C is a challenge, tutazifanya. And be referring to what we did, and group discussion, watu waingie kwa group discussion. So tunasema tufanye December 2023, question number 1 yote. 1 itakuwa sawa. Yeah, question number 1. Hiyo yote sawa. Hiyo itakuwa mzuri sana. Hiyo kwanza ina kutest hizo vitu zote at once. So nataka usifanye ili ujue challenge penye inaingilia, tuweze kuitatua pamoja tukipatana. Tuweze kuitatua pamoja tukipatana. Then I think the other one is for 2023 April. Almost there. Yeah, April 2023. I don't know whether I gave you this one. You know, I can't remember, but you can just confirm. This August still go, and this December. No, first of all, wait. April 2023. Mambo ni mengi, vitu ni mingi. April 2023. Let's try question number 1 yote. Yeah, 1 yote itakuwa sawa. Yeah, 1. Question number 1. I think hiyo kazi imetosha hiyo weekend. So make sure that by next week, by the time tunapatana, at least tumemaliza. 2023, this question number 1 niliwapatia. So hii mambo iko vizuri. Sawa, basi kama nilivyopatia hiyo. Mmoja hajafanya, umejua umefanya. Umejua umefanya. Sasa ufanya hii ingine hapa August 2023. You did, yeah? August 2023. Sasa hizi vitu basi tumemaliza hizi. They are forming basis of our revision. August 2023, question number 5. And ni vizuri at least you're able to spot that umeifanya. That's better. Question number 5. So mwenye hajafanya tafadhali make sure that you do. Wakati tutaanza hii revision, it will be easier for you now to start seeing where you went wrong. I think hiyo ni enough for let me see. Why can't you go and try this one for payback period again? Why can't you go and try? Yeah, twende tujaribu hii. This is April 2022. Question number 2. Question number 2C. April 2022. April 2022. Question number 2C. Now that is enough. That is enough for the weekend. So you create time. You create time, and you check on your theory. How far are you like that? Whatever, have some short notes. Be committed. Be intentional. And by the end of the day, you see yourself at the top. That is it. I can see it's already 7:03. Taking your 3 minutes. Let's wind it at that point. Thank you so much for having time to attend our today's lesson. It is always worth it. It is always worth it. May you all have a blessed day. I've been your lecturer, Stephen, dedicated to inspire growth. Goodbye. Wacha tuongee next time.